Guys, I have something absolutely beautiful that I have to show you, and this is by Plan B, the Bitcoin stock to flow model. And as you can see here, the green dots have historically been the best places to start accumulating Bitcoin and also identified the bottom. So in this cycle, 2015, 2019, and right now 2022, and as we can see, these circles are becoming dark greenish, which always historically has signalized a bottom. But the big question is, Thomas, were you actually wrong about saying that if Fed is going to reaffirm its hawkishness, then the prices are going to go down? Maybe it's going to be vice versa. So let's talk about this in this video. Let's take a look at some very important data from Blackrock, so you cannot afford to miss this stuff, and quite a few other things, because really, honestly, this Bitcoin stock to flow model doesn't really lie, and it looks very, very beautiful. But the only thing that is more beautiful than this model are going to be the trades that we have prepared for you guys and girls for this week inside our free Discord channel. So if you want to learn how to trade for free, if you want to copy our trades for free, then go down into the description of this video as well as into the pinned comment. At the top of the pinned comment, you'll find a link to our free Discord channel where people are making ridiculous profits. Look at the 64%, 1000%, 200%, etc. It's just infinite. The number of profits our community members are taking, it's ridiculous. So join us right now for free. Link down in the description of this video. But I mean, certainly, so many people are, mega bullish because of this. And I told you already that, when we were seeing these kinds of on-chain data and, these kinds of models and price predictions, it really all does not matter. Especially, when we were seeing these kinds of things that, 2S and 10S yield curve inversion has been the deepest since 1981. So, these kinds of models get broken in this kind of macro environment. But before we make any conclusions and before we come back to this chart and take a look at the long trade that I still have open, raking in like $12,000 in profits, let's take a look at some more data, which is going to give us a very interesting insight as to how the price could potentially react to the press conference on the 2nd of November. I think that you really have to pay attention to this because this is going to be very, very important. Well, for one, let's take a look at what Charles is saying. And he's saying that this is, like, in his opinion, breaking news, that economists at Blackrock, and you know already what Blackrock is. It's like the biggest asset manager with trillions of dollars under management. They're telling financial advisors that they expect a pivot language at the next Federal Reserve meeting, 2nd of November, when they expect Powell to announce a 75 basis points rate hike, but followed by two smaller ones and a pause to get us to around 4.75, which would be, again, very, very dovish and also signalizing the pivot, and the markets would rally right like crazy. So, and here is a very interesting graph of what we can, different scenarios of what we can expect from the FOMC meeting on the 2nd of November. And this, by the way, is something that I've told you already before, but here is an interesting, visualization of it. So we would be very hawkish and the prices would definitely go down if it would be 75 basis points that we're already expecting and no forward guidance on the path for the hikes, and very, very hawkish that the price would absolutely crash if Fed would go out and just suddenly decide to do 1 full percentage point and Fed signaling clear intent to crush the inflation. Now, when it would probably be quite positive, neutral. We'll see exactly how the price is going to react, but I think it's going to probably rally if the Fed is going to do 75 basis points and will open the door slightly to slower rate hikes ahead, and this is exactly what Charles is talking about here. Now, let's discuss what would happen if it would actually be 75 basis points and, for example, no forward guidance. So we would say that normally we would see a big crash in the prices. However, let's take a look at this piece of data, and this is very, very interesting, by Charles Henry Monchau. So this guy is extremely interesting, and what his argument here is, as he says, the argument is very simple. Yes, the Fed might surprise hawkishly, but, and this is something that, as I said in the beginning of the video, that I could actually be wrong about in my previous video. But the latest largest sellers have completed, so there is nobody else to sell, according to him. And more importantly, there is now more than $20 billion worth of daily equity demand on the week, assuming a flat tape. which is pretty cool. 12 billion from systematic, 5 billion from corporates, and 3 billion from retail, which should help mute FOMC volatility. So this is what we have to probably pay attention to right here, because it actually makes sense. So basically his major theme is the following: fundamentals are weak and expected versus technicals and seasonals immensely strong and not expected. Over the last, this is the most important part, guys and girls, wake up, listen to this. Over the last 30 years, 20 BPS of new money comes to the market every November. On 22nd trillion in assets, this is approximately 44 billion or new 2.5 billion per day. So this is quite huge. So this means that theoretically, even if it's going to be something like hawkish, unless it's going to be like very, very hawkish, then certainly. But if it's going to be hawkish, so any one of these three could actually, stimulate the market, because this is what we are expecting just seasonally, that November is bullish. And midterms are also coming up, and probably the US government will want to pump the stocks a little bit to make people happier. So, and this now brings us to the chart of what we are expecting, and also to this trade of mine that I have. And remember that if you want to be trading actively, then there are all the links down in the description, as well as in the pinned comment, to all the awesome exchanges, and up to like $20-something thousand in initial deposit bonuses. And with BitGet, you get especially huge bonuses. You can pause the video and take a look at all the bonuses you're getting if you use my link down below to BitGet. So if we are going to talk about the current price targets, then for me, we are currently above this level, which is a very important blue level for us, which was at about 20,350. And so far we are actually above it. So unless we go down below, I'm fine. And again, the November the 2nd is coming up very soon, so I'm not too much worried about this right now. We really need to again break this yellow resistance, which is about $21,000 at this point. And then the next targets, as mentioned previously, are going to be $22,600 and $25,000, which again would also the break of this yellow level. If we're going to go to the daily chart and remove the volume for just a second, then we're going to see a double bottom formation, and this would trigger actually a rise to about $35,000 if we would believe in these kinds of simple patterns, which, as you know me, I'm very skeptical about these patterns. So nonetheless, what I really want to point out though, but that while we are waiting for the FOMC meeting on the 2nd of November, the volume is actually going down. So this is a weakening sign. So I wouldn't be surprised into the FOMC meeting that we would see some kind of a drawdown, maybe even something like $20,000, 19,800, etc. But I still wouldn't close my long trade, simply because we entered quite early into the break of this level right here, which was very spot on. So I hope you've called me Mr. Spot On down in the comments right now. And this is what we are expecting. And certainly I'm going to keep this long trade for as long as possible, just considering this, that we are seeing that in November could be very, very bullish, and especially understanding all these models, and also understanding what all these guys have said and what Blackrock is expecting from Federal Reserve. And usually when BlackRock is expecting something, that to be honest, it probably has a very good probability of happening. So this is all I have for you guys. Remember to join my free Discord channel right now, so to get in all the trades that we are taking here and make money while everybody else is losing. So join us. I'm going to also link a free course that I've done on crypto for absolute beginners. You're going to learn how to trade Bitcoin as well as all the other altcoins. And as always, peace and love, stay smart, stay rich, and I'll see you in the next video. Bye-bye.